Good morning, everyone. Welcome to the London session on TopstepTV. If you're here for the first time, my name is Deeyana Angelo, aka Marcus Dee. I've been trading for 17 years, and 12 years out of that, I've been trading futures, mainly specializing in energies and metals. So we're going to see what we have here today. Let me just move this over. Okay, and let's see what we have in the chat. So I logged into the YouTube chat to see what's going on, and a whole bunch of people are chatting. So let's see who we've got. We've got Scott Martin, we've got Lido. Richard Harris is here. You're not sleeping, Richard? Good to see you. Gatlin. Who else have we got here? James Harden. Okay. So I see James has made a post. So Dakota wasn't feeling very well, so we had to cancel the slow markets class. And in a way, London is still a part of slow markets because the products that we have on Topstep are still pretty slow for this summer day. So we're going to see whether we can find something. I'm actually stalking copper right now, possible copper long. And we'll see whether the acceptance of value that is happening right now can bring us some follow through. So I have overnight VWAP on copper located at 413.30. There are some options related levels at 415, so they're a little bit more minor. And we have space with the projected volatility all the way up to 417 and 419. Now, if I go to the daily chart, just so that we can see where we are in that very big bird's eye view, you can see we are at the bottom of this entire range. So if we are going to dip into the initial balance for the second hypo, so one hypo is the value acceptance is going to bring us follow through, but if that doesn't happen, there is some value in a failed auction from around these levels, although I would like to see 415 get hit first regardless. However, to the downside, to take the opposite side of the trade and to avoid that bias, to the downside, I have 412 as a potential level of interest, and then further down 410. So those are kind of some pegged levels that I'm looking at on copper today. But for now, we managed to accept value, just London value from yesterday. Just going to put a line in here. Can't wait until the TPOs arrive. So London value low was at 413.85. Let's change this color here. And then value high is just above that 415 level. So let's just put this in here. I think it's 415.30. $45. Okay. Right, so those are some of the levels of interest. I also have an anchored VWAP here, which I anchored to the regular London Open, but it has a normal calculation, so it's nothing anchored to the low or anything like that, but we can try anchoring it to the low as well, just in case we start to dip down. But for now, both of those VWAPs are actually at the same spot, so that could be another indication of a breakout. I actually would like to see one of them get tested, so maybe just to get a little bit of a better risk reward profile on the trade, and to maybe dip down to one of those VWAPs before price goes back up. Although my initial disaster stop that I like to use on copper is about 12 points. That's about 20, 25, 26 ticks. So that would cover it. So I have a couple of options here to basically just go in now and see what happens. But seeing how my little ribbon here is behaving, I am on a 2-minute chart rather than a 100-tick chart because I don't think that the tick chart today is providing me a better option. And why? It's because there's just not that much movement. So a time-based ribbon actually is more representative of what we've had so far, if you can see. So we have move up and then a nice sort of walk along the ribbon, and now they are trying to go back. So because of that, I would like to see maybe a little bit of a pullback, like I was saying, and then try to catch it somewhere from this area. So I'm just going to put maybe a rectangle to delineate the zone that I'm interested in. So we're going to see if we can get there. And if not, if it just shoots up, so be it, right? But I prefer not to chase this. I prefer to see pullback, then a reversal, and then to go in. And you know, we're working with a 2-minute chart here. So that's still a very, very low time frame. We should have some space there. Obviously, if it's the FOMC rate decision today. When it comes to the euro area, we have the CPI from the Eurozone. So I would like to see that out of the way before I do anything on DAX today. And that is going to be happening in about 22 minutes, roughly. Of course, we have rolled across the board. Crude oil is rolled. RBOB is rolled. Gold is not rolling. Gold has stayed in February. Yeah. So gold is still in February. And there's not much happening in gold today. Let's just have a look at here. We did go over 2660 in gold. And that kind of opened up some options to go even higher towards 2685, but I'm not really that interested in gold today. Let's have a look at some equities developments. So ES is pretty bullish this morning. Let's have a little gander here. Overall, looking at where we are on the daily chart, we have some balance here. This is ES daily chart. So it's still, like, by the way, if you are a momentum trader, these sort of markets are so painful to trade because every time you do a breakout trade, it just smacks you right across the face. So I would suggest maybe looking at a range bound strategy whilst this is resolving. Maybe after FOMC is done, we could see a breakout either side, but I don't think they're going to be breaking out of anything until the FOMC today is out of the way. So cautionary tale here about trading momentums in a balance. But yeah, that looks pretty painful for momentums. And one way to approach a range-bound market is first and foremost to stay away from VWAPs because they're kind of middles of the middle. So what I like to do, I like to reference the initial balance and any sort of extensions, and then look at those as extremes of the range. That tends to keep you out of trouble. And then whatever you're looking for, whether it's a long or a short, just aim to get in at the extremes of that range. And then your VWAP should really be, it should really be a target, not any kind of a starting point. And same goes for volume point of control, which is a faster measure than the TPO point of control. But same applies, right? That would be a target. It wouldn't be any sort of a starting point. It's not a favorable it's not a favorable trade location in a balance to be getting involved in the middles of the middle. So you want your trade to have a better than 50-50 chance of working out. And in range-bound conditions, those sorts of trade locations are located at the extremes of the range. So just apply some critical thinking before you decide to run a momentum trade on ES in particular. Now I know that so many of you are totally addicted to NQ. And NQ is exhibiting a little bit of a balance. It's obviously much stronger than ES, but it's still beginning to almost like lose some of the momentum. So if you see how the market is behaving here, you have one rise, then you have a speed bump, attempted a sell-off, failed sell-off, another high, then another balance. This is the daily chart, right? So it's like all of that is just kind of stair-stepping higher. But these little consolidations that last for 2-3 days, they can also be a little bit painful for most. And I can see in the main broadcast, people are already complaining about the quality of the price action, and everyone's like, it's weird shit. It's like, it's not shit, it's just balance. So if you just shift your thinking a little bit and stop chasing breakouts for a hot minute, maybe you'll find a trade. Yesterday's example being the primary setup that you would look for on a day like that. So let's see what time this was. Yeah, so I was talking about 22,200 as an area where I would want to look for longs, and very late overnight we got that. However, look at the end of the regular trading hour session here. So we established the initial balance. So just for visual help, this was the initial balance low. Remember, this was the initial balance high. So the first thing that happened is that the auction failed and did a rotation through most of the initial balance. Then we got to the end of the day, and everyone's like complaining, oh, this is terrible, oh, this is so difficult, this is so... And then at the end of the day, I actually did do a little long on M&Q, and I got a good portion of this. So I got a nice move, not all the way to VWAP, but I did run it up to about 314 was my entry, and it overshot, so I didn't get the full move, but I got a good portion of it. And why? Well, usually when you get to the end of the day and you still haven't had the extension of the initial balance to the opposite side, any kind of buying activity can actually be pretty juicy for a scalp towards the end of the day. And that's the sort of trades that I usually do at on equities. So I won't, I'm not interested in them at the beginning of the day, middle of the day, nothing. But once we go over to the last sort of hour, so power hour, last half an hour, I will look for these sorts of moves. Now, even if it smashed down through the low, I still would have looked for what I like to refer to as a neutral day fade. And it's always a setup that I will take any day, unless we had maybe like a gamma flip through the options activity levels, and then you have like some level that got broken, and now you're going from the low volatility to high volatility environment. That would be the only thing to keep me out. And in that case, if you do get an extension of the initial balance below, usually you get single print as well. So I think the ICT traders like to call that the displacement. So it's usually a very big, move outside of the reference range, and it kind of goes to a brand new price level. So that's a couple of things in mind. Now for NQ levels today, we have rolled into March contract. Now right here we don't really have anything. It's sort of like floating up in the air. If we get to 22,500, I would consider the entire zone from 22,500 up to 22,550 as a potential zone where we might see some selling if that comes in. But again, until FOMC, I wouldn't do anything. And that's again late in the day. I don't like trading FOMC because there's so many whipsaws, and they just go completely insane, and usually they don't necessarily come up with a trend immediately unless it's some sort of a reprice. And okay, so this copper seems to not want to go to VWAP, and we have a little bit of structure here around that value low from London. So I'm going to try a little tiny micro trade here to see whether we get any sort of traction towards value high. We're just working in ticks here. So 18 ticks for a stop, 19 ticks for a take profit. Still a danger of going back down to VWAP, but for now the anchored VWAP on copper is actually crossing over the other VWAP, which can be a sign of strength. It doesn't really guarantee anything. So I would still like to see a committed price action push somewhere. So I'm just going to keep on the 5-minute chart here, so keeping time on our side. And like I said, these markets are not really my favorite. So yeah, NQ levels to the downside. They've actually moved about 100 points. So we have 22,100 area and just above. So in and around, again, it's a 50-point range. So 22,100 down to 2250. So 2205. That would be my levels to target in case we go into some sort of momentum trade to the downside on NQ. Anything in between is they're not levels that are that important, but you could see some market makers getting involved to cover their CYA, right? And to keep in mind that there are GEX levels at 22,250, and then a more important one again at that 22,200 level that keeps popping up. To the upside, we only have 22,400, and then really nothing until we get to that major area of 22,500. So those are kind of pegged areas that you can use for orientation as the market is moving up or down, and then to see, is there strength around 22,400, or are we breaking through it? Are we reclaiming it, or are we printing the displacement and some single prints, very strong movement away from those levels? So that's how I use them. I use them for orientation throughout the day. It is a more advanced way of looking at things because it's taken from the options activity. So if you are fairly new, like 2 to 3 years of trading, it might be a little bit tough to connect everything, because trading is not really rocket science. It's more a matter of needing to remember a whole bunch of things at the same time. So that's what people struggle with, especially when it's like the heat of the moment and you're like trying to make everything work. Well, everything's like, crazy. And this is why checklists are pretty good. Checklists are something to consider. Right, so we have a new higher high on copper on a 30-minute chart, so let's reference that. So we managed to push into a high, but as always, we need to see a sustained move into this value. I mean, it's doing okay so far. I might actually just extend this up towards the slightly higher range here at 417. Just in case copper does one of the trending moves, just kind of keeps going. And one of the reasons for that is because the CPI releases, whether it's Europe or US, can actually push this along. So we're going to see what happens in about 10 minutes time. But the Euro CPI is not as lively as the US one. So I'm probably just going to keep it and then see what happens. And this is also why I'm in with just one little micro, because I don't want to dig any sort of a hole today. Let's see what Raphael is saying. Good morning, Dee. How are you? I'm very well today. Thank you. Had a very good night's sleep, very long. What to do if it hits your stop loss and the price reverses? Well, you need to go back and reconsider the stop loss size that you're using and the levels that you're using your stop loss at. So your stop loss placement is probably not great. So rather than crying over it and looking at your P&L, you can't blame the market makers. Blame yourself, man, because, you know, blaming the market makers, they don't, like, frankly, they don't give a shit about what we're doing, you know, especially not if it's an XFA or, you know, if you're not in live, they don't see your stops. So the only logical solution, you know, Occam's razor, is that the stops that you're placing are either too tiny for the market that you're trading. And I mean, let me guess, you're trading NQ. Shock horror. If it's not the case, let me know. But usually this is what we get. Now for NQ, whenever I'm trading, I actually start with a disaster stop loss of about 35 points. Most people will use 20 points. I don't think that's enough unless you're like super surgical and precision-like, which I'm not really that much in favor of, because it doesn't give you any wiggle room. So two options. You're a momentum trader and you're getting involved at the breaks of areas that then don't work out. So you end up in a range-bound day. So it hits your stop because that's where everybody else's stops are. Or you're simply getting involved in the middles of ranges as well, and placing your stops at like nonsense areas. So let's kind of illustrate something here. So just for reference, let's say that you are looking for a long on NQ, right? And you want to save some money because you're afraid of losing like a lot of cash. And yes, you want to trade minis. So most people that are retail traders, they will be putting their stops very close by. So they're putting their stops at, say, 22,335, right? So their entry would be looking, let me find the measured thing. So their stops are looking something like this, right? So that's your stop because, oh, well, that's a structure. Is it really a structure? Is there an actual wave before you figure that this low might be good for a stop loss placement? So I can see a couple of issues here. Well, there's a bigger low here. And that's a significant low. Why? Because we had a wave down. We had a wave down, significant wave down, significant swing down that created a more significant low. And then you go up. So the second thing is that some people do see this and then they go, well, I'm going to go in and I'm going to place my stop. It's like, this is going to be a limit order and I'm going to place my stop here. If you're doing that, you're also asking for it, right? Why? Because everybody and their mother will be placing their stop exactly there. So what's a better entry here? Well, that's not it, okay? The entry where you will have a one-up on all of the other retail traders who have no idea what they're doing is to actually place your entry once the stop run happens and away from all of the big levels. And in this case, this would be a very good long if you can justify it, price permitting and a whole bunch of other things. But basically, once the stop run happens, you're placing your stop not only below VWAP and the other low, but also quite far away from those levels. So even if they stop run, you will survive. You will survive. Gloria Gaynor, right? So think about it that way. Don't blame the market makers. They don't even know we exist, And I'm telling you this as somebody who's worked as a market maker. They don't care, right? What they do is they just look at where most of the orders are located and then they can grab a little bit of cash for themselves and their clients, right? They don't care about us. So I would really re-examine your stop loss placements. And here's another tip. If you are looking at placing your stop at a round number. So let's say around here we have 300 as the first round number, or even 350. So those are some kind of big levels that you might find that they actually have market making activity around them where they have to do hedging, right? That, once something starts going crazy, the market makers have to start hedging. And if you don't really understand why it happens, it's also why, some of us have the Series 3 license, so we understand exactly what the hedging activity is all about. You will forever be scratching your head and wondering, why are they doing that? It's because they have to readjust their inventory. We talk about it all the time. Oh, these short inventory, there might be an adjustment to the inventory. Well, what is that? Is the market makers just adjusting their positions so that their risk doesn't go completely crazy? They have to adjust, right? And those are some of the levels that we look at, the peg levels from the options activity to see where they might be getting involved. That's why I say it's a slightly different way of looking at things. But generally, if you're placing your stops at round numbers, so let's say you place your stop short. So let's say we are fading from this little supply here, just looking for good examples. And you go, well, I'm going to go short here. And then you place your stop right at 350. Right at 350. Is that a good stop loss placement? No, you might survive on some occasion, but the better option here would be to actually have your entry at the previous supply area around 350 as a round number, and then to also have a little bit of a wider stop. That will mean you're not going to get stuck in the stop run that they might do at some point, especially if you have an options activity level like a gamma exposure level or something. And that will put you in a much, much stronger position. So whenever you're getting involved in the middles rather than the extremes, you really need to ask yourself, is this a good stop loss placement? In light of the definitions that I've just given you. So I wouldn't be going, market makers. Don't blame the poor market makers. They're just doing their job, right? And us as speculators, we need to do our job. We need to make sure that our positions and our stop placements are big enough. And one thing that I actually mind with the house account, every time I've been on there, they always like to place their stops at round numbers. And I think recently they stopped doing that. And a lot of the times they actually managed to survive any kind of impending stop runs. Because, everybody's learning. We're all kind of trying this committee trading. And, it's difficult. It's difficult to have so many voices and people saying one thing. And it's where should be our risk? It's one of the reasons why we went to smaller sizes, to accommodate some of the larger stop losses that will make us survive a bit better in the environment. And look, so if you were aiming for a momentum trade down away from a swing extreme, and you place a stop at the original 350 level, you would have been stopped out now, because look what happened. They're back there, right? They're back there. So what would be a better option? Well, I'm not saying shorts are the right thing here, but if you kind of deem, well, this is a short area, and just to remind you on NQ, I'm not looking for shorts until we get to 500, this would be a better option. So aim to snipe it at least somewhere closer to the top. And maybe even after, if you follow me on Twitter, yesterday I posted the second trade that I did on gold that appeared after the stream. Typical, right? So you want things to appear while you're on live, and they don't, because again, gold tends to pick up and get lively after the stream into the overlap. It's normal. But basically I posted the stop run and reverse setup that I actually quite like doing in many cases. So I'm just gonna go back to those. So here is the first explanation. So this is 1 minute chart, equivolume, and this is the setup. So basically you get this fat exhaustion candle followed by quite a bit of volume that goes back inside the previous range. And then I set top of the range of the session and VWAP as target. And then the next one was target reached. I already took the trade off, and it's like 26.58, right? So it reached the target. Session VWAP, this is overnight VWAP. Session VWAP was around these areas, and it actually ended up overshooting it. So it was a much bigger trade. But it's very simple, right? It's like you look for a stop run in reverse, then you place your stop away from that level. It's a little bit safer to do that. Yeah, I see everybody's doing the Gloria Gator now. It's one of the songs that we used to do when I was doing gigs everywhere. At first I was afraid, I was petrified. Yeah. It's actually very applicable to trading, isn't it? Yeah, first I was afraid, I was petrified. Can apply for NQ as well. Kept thinking I could never live without you by my side. Yeah. Yeah, you need to wait for the Dragon A setup, Bruno says. Now, what's a Dragon A setup? Let's have a look. I did promise I was going to do this. Dragon A setup is a very special setup. Let's do a bit of light-hearted entertainment here. So you know how we talked about patterns yesterday and how, I'm not very keen on patterns? Well, here's a good pattern. Yes, Bruno, our lovely moderator, he sent me this. So this is a dragon pattern, right? It's like a dragon puking up some fire onto the unsuspecting audience. Is it a valid pattern? Yeah. I would think that it's a nicer pattern than head and shoulders, right? So we'll see. Yeah, we'll see. We'll see whether the dragon does indeed puke up for the FOMC. But yeah, so this is why I'm not generally in favor of like what I call them ink stains, because you can literally like find any sort of a structure and any kind of a drawing and pattern that you want and justify it, right? I mean, why isn't this a valid pattern? The Dragon A star setup. That's what we're going to be calling this. So we're going to have that. My drawing skills are nowhere near as good. I draw stick figures. It's not one of my talents. So I'm going to have to rely on Bruno to provide me with these beautiful drawings going forward, because I think they're useful, right? We have a dragon pattern developing. But yeah, waiting for the for the stop run, especially in NQ that does these stop runs quite frequently, and frequently by about 20, 30 ticks, sometimes even 50 ticks, it just overshoots and then comes back. So if you see my Twitter post, so if you look at that volume exhaustion candle before reversal, that could be a better thing to place your stops rather than constantly waiting for the market to turn around away from the swing extremes and perceived highs and lows, and then crying that your stops are getting smashed because they look like this. So always try, whenever you can, to place your stops away from swing extremes. Now, if you're doing a breakout trade, let's say you want to go long, like I said, similarly, you need to wait for the break of the structure. So this wouldn't be a good breakout trade. But if you look for a break of this one, well, don't go in immediately. Just, see if it holds outside of it. Because, again, you're going to be in the same situation where there might be a shakeout and a reverse. And then you're sitting in what I called the range exhaustion, stop run exhaustion reverse trade, right? So same thing applies. You need to make sure that they're not stop running and coming back into the range, but that they're hanging outside of the range. So those are some like basic rules to follow when you want to place your stops. And you can't be placing your stops near the previous high either. It has to be underneath the previous low when you're looking at a breakout. So if you're looking at a break, and sure, you can front run it, but in that case, you need wider stops. Again, it all comes back to not using super tiny stops. Now, if you're somebody who can make really small stops work, that's great. But one way that I found that the tighter stops would work for me is to maybe front run one trading idea. And then if I lose, I only lose about, 20, 30 points there, which is like super cheap, because one contract on our bulb would be like 420 times. Yeah, that would be like $150 roughly. And then as the setup is moving in your favor, I have a default stop size on everything that I do. And for RBOB, that's usually about 85. And if I'm scaling into something and making my average price worse and worse, it would mean that I still have some room. So I front run one contract, then it moves in my favor and creates a pattern or maybe a bigger time frame and holds above some of the areas that I'm looking at. I will pop in another one. And then if that one goes against if that one totally goes over my planned maximum stop loss of 85, I won't be adding. But if I still have some room and I still have some patterns, that third add-on is typically the most aggressive. Whereas the first couple, I might try front running it, or I might try waiting for a reversal. And then it usually dips against me, so I might add a second one. So there are a couple of ways to add. And it's always a more scientific way and more systematic in my case than just kind of going, I'm just going to be plowing into a position like a lunatic until I'm maxed out. So I do have like points where I'm adding, and I don't really like to partial the position necessarily unless I have a very big level and I want to try and hold it past it. But generally, I will be waiting for the market to show me the way. And if I'm going to front run something, I'm always front running it with just one contract. Because if I get smacked on the face for that $150, or even $200-300, depends on your starting position, it's a smaller loss, right? You're not digging a hole of like $1,000 right off the bat. David Castillo says, so you're saying to just allow yourself more risk accordingly? Yeah, absolutely. Allow yourself more room to make a decision, because if your stops are so tight that you don't have time to react, that's not a good thing. You're just going to be like, smack, ouch, smack, ouch, smack, ouch. Oh, third or fourth one worked out. Oh, okay. I mean, it's a very painful way to live, right? I like to float around about sort of 43 to 52% on most days. For most of the trade setups that I take. And yes, some weeks I have outperformer weeks where, I'm smashing it at 70 and 80%. But remember that I look for bigger, like I'm a selective trader, I look for much bigger opportunities in the market. And I don't do 50 trades a day. Most of my add-ins and scale-ins are what you might see on some of my trade reports, but they're not the core setup. They're just like one trade that I've scaled in and out of, right? Usually in. And that bumps up from like one trade to like 3 or 5 on the report. But yeah, so allowing yourself more room to react is always better. So smaller size, slightly bigger stops. And if it doesn't work out, have a cutoff point where your trade setup is invalid within that range. So even if you are scalping, you should still have an invalidation point. It's absolutely no excuse to say, but I'm a scalper. It's like, yeah, but where is your scalp invalidated? Like for me, if I'm doing a stop run and reverse scalp, and it's usually always a scalp, I know that if it dips down below the range, I don't want it. Like we're not in the old range anymore. It's a breakout. So it's not a stop run and reverse. It's a stop run and keep going, right? Nanka says, I trade oil too. I do trade oil, but I've got to be honest, guys, I've been trading RBOB a lot more because crude oil just drives me insane. Like for the last 8-9 months, I just can't work it out. So really being like super straightforward. It used to be my main product. But ever since it dipped down to do these, like people say to me, oh, crude oil went up today. And I look at it and it's like barely up $1. So I'm like, what? Crude oil used to go like $3 to $4 per day. That was the range. And now the only place where we still have that is obviously we have NQ that goes 800 ticks in a day. And all of the other instruments have like almost dried up. Like, what's going on? They're going through menopause? Like, what is this? And with crude oil in particular, it's completely changed personality, right? It's like 100 ticks on crude oil. It's like for 12 years I've been trading this thing, right? And I've never seen it this quiet, ever. Unless it's like a summer or, everyone's on vacation. I'm just like, what is going on with crude oil? And then one of the guys in the chat said, have you looked at RBOB? It was actually Kevy, a guy named by Kevy. And I looked at it and I'm like, holy crap, this is like crude oil twin, but with a 400 tick range still intraday. So I've been trading RBOB towards the end of the day. So I'm doing kind of the same thing that I was doing on crude oil. And I actually still use crude oil levels for that. So I use CL levels, all of my like value areas, everything, VWAP, options levels, and then I just look at, all right, copper's on the move. And then I just look at the RBOB charts and just look for the evidence of which one is stronger, weaker, and then decide whether the setup is still valid. So it's a very nice way of doing things for me because I can see which one is a leader, which one is a lagger on the day. Crude oil is in a rollover last couple of days, and so I'm trying not to trade too much until that's over and done with. But it should be. I mean, we should have rolled. It might be another couple of days until things stabilize and stuff. But RBOB for me definitely. I was joking in Rips' stream yesterday that we've had a trial separation with CL, but now the divorce papers are being sued. So I've looked at metals to like try and find something else that might be great. But throughout all of that, DAX has remained very nice for me, and it has been my main product this year. I'm really, really sad that we still don't have it in Topstep because it's such a great product to trade. And here comes the plug. Plug for your ex. There you go. Please upvote, guys. If we get it to 400, it might be that they actually push it forward. What is RBOB? RBOB is gasoline futures. So a very, very similar product. It's an energy product. Very thin. Like if you look at the RBOB on the Dome, and if you're trading it live, you really need to be careful where you're getting involved because there's only a few contracts here. So therefore, if you want to execute 10 lots, you're going to be waiting for a while because obviously you have to grab all of the 10 lots either side before they can fill you. And you can have fill or kill, fill everything or partial. But actually on RBOB, this is another reason why I like to partial into a trade. You do one, which is available here. Then it moves to some new price levels where there's a little bit more liquidity. Then you plow in another one. Then you see that maybe liquidity has moved up, and then you kind of go and snap another one up there. And, it's a much better way of doing things than just plowing in with like 5 or 10 and then, complaining why things are not happening. Let's go back to my micro copper. And I've got to say, I'm still waiting for the transfer from one of the XFAs. That's been like 2 weeks now, so that's getting quite long now. Okay, let's have a look at some more questions. Do I only trade metals? Yeah, I already answered that. I'm primarily an energies trader, but if we're looking at the overall European markets and everything, I trade DAX in the morning, so usually in the overlap. I trade energies and metals usually after 9 a.m. Central. So that's when I would be looking for setups. I would be looking for usually Euro close. Around the Euro close, I tend to get a pretty good setup in one of the metals. And because of the systematic method that I use, I can apply my analysis to a wide array of instruments, right? So I've been I'm not a new trader. I've been doing this for 17 years, and I have a systematic way of doing things. I'm not that discretionary. Like, there's obviously discretion if I'm going to enter a trade, but when it comes to levels and all the things that I want to see in a setup, it's all pretty systematic, right? And with that, I effectively can look at a chart. However, when I started trading other metals, because I've been trading gold for 12 years, but I didn't really trade copper that much. I didn't really think that it was a good product back in the day. It seems to have livened up a lot, and it still goes through periods where it's very quiet. So I do keep an eye on the volatility indexes in order to figure out whether I actually have any merit there and whether we should be trading it, whether volatility is high enough for day trading purposes. Because of the approach that I have, I can have a look at it and I can go, okay, well, that looks good today. But I certainly don't go, if copper doesn't work out, I'm going to go to gold, then I'm going to go to silver, then I'm going to go all on the same day, right? So in a particular week, I will determine which of them looks best. And then depending on which one has the highest volatility index, or maybe the volatility is rising, whereas others are falling, which is the case in gold right now, I will be focusing on about 3 to 4 products per week, right? So it's not total, like I guys like to call it, grasshoppering, just overtrading and hopping from one thing to the next, to the next, to the next, looking for the next dopamine hit. It's all a very kind of calculated thing. And, so don't try to emulate unless you have the same sort of analytical brain and approach where you can systematize whatever you're doing, right? And that, that takes time. It's very difficult, right? And somebody's asking, how do you trade? How do you read volume profile? Well, we could be here forever for that. Volume profile is simpler than TPO profile. And I suppose the main points would be to look for areas of high volume and low volume, right? And then to maybe use, like, for example, here on this visible range, we have the assumed point of control up at 419.05. So if we're very low below that area, you would expect to see a return to the thickest volume. So think about it as supply and demand, right? Whenever there was a lot of trading going on, but the price didn't really move away from it, there's a lot of people who were stopping the price from going further. So there was a price agreement. That's usually where you see the point of controls, right? Now, once we move away from that, you can find like a momentum trade away from it, or once we're very far away from it, you can run a mean reversion trade up to it. Now, obviously, we have the visible range profile here, so whatever is on the chart, your point of control will shift. So, for example, if I just want to see the regular trading hour point of control, what's going on today, I would just go to make my visible profile to incorporate the overnights, maybe part of the Asia session and the London session. So where is our point of control now? Well, it's right at 414.60, smack in the middle of where Asia was trading before it broke down. And then we spent a little bit of time here. Look at this. So we reached the area, and then we spent an hour trying to battle it out. So that's kind of what I was waiting for. And then it went massively through it, and now we're sitting at the other side. This is my target 1. So if I was in with more than one contract, this would be an area where I would be exiting. but I did put my actual take profit up to the ASR high, which is at 417. So I am looking for a bigger move, which may not come during this stream. And just to, to maybe just, get out of this or something, I am going to close this out because we are in danger of that value high, bringing us the reversal for the time being. Now, if I was planning this out away from the stream, I would just stay in this trade and I would not even, consider getting out. I would be planning for the next 3 hours to stay in the trade, right? But again, I don't like trading some of these products that we have for London because they tend to die a death very quickly. Okay, so let me just draw your attention to this NQ chart now. So look at what we've got. We've got a big whipsaw. Where is that happening? So it happened after the break of the high, and they tried to reverse. They tried to go back into the range. So now what you've got to look out for is for two sides of the story. Is this just an exhaustion candle? And are we going to go back into the range? Or is this a breakout that's sustaining? Now, for sustained movement, I like to use a 15-minute chart. So if we manage to sustain above the previous high, that is a cause for a breakout trade higher, right? And this was actually an initial balance high yesterday. So maybe there's something to it as well. And then if you decide that you're going to go long, I would usually use 35 points as my starting disaster stop loss. But it's not to go, I'm just going to leave it to hit my 140 ticks. It's literally a disaster stop to give you enough time to bail early, right? That's the whole idea. That's the whole idea here. So let's say you want to do a long now. Well, on a 100-tick chart, we're kind of popping above that ribbon. And we need to see the ribbon turning backwards, turning back up, right? So right now it's sloping down. That's not a good thing. And we also need to see this DMI picking up a bit more as well. So if you were going to do a long towards those 2500s or something, you still need to wait for the price action to turn around. And my first point of like a speed bump would be 22,400. So if you get the price still sustaining above that previous high, that would be a breakout trade. That was the previous high, right? So where is my nearest round number? It's still 350. It's still 350. So let's try a breakout M&Q. Just going to do one. So disaster stop for me would be 140 ticks, right? But because the 350 is only a 100 ticks away, well, less than 100, it's actually 78 ticks. So I can actually reduce that a little bit. And then if this doesn't work out, you can bail early around this invalidation point. So what's the invalidation point? If we start to dip into the previous range, which is sub 22,359. So if this is not really a breakout, if it's just, a random move to whip everybody out, it will become obvious by coming back into the range. But this sort of a stop loss gives me enough time to react. So that's about 23 ticks, but this is an out of hours market right now for this particular product. So yeah, this would be now breakout long towards 22,400. All right, we got 5 minutes. Let's see. Just a quick question: how long did it take you to become profitable when you started trading? So I was lucky to have a friend who actually put me on to trading. I wasn't that into it. I kind of found it interesting, but because I was just just a trader, just a musician who was partially interested in all things trading. I basically decided that I actually wanted to see whether I can find another career, and then I was talking to him, and he said, "Well, let me show you what we do," and I got really obsessed with it. So really, in the first year already, I found some success with supply and demand trading. It was swing trading, so it wasn't intraday, it wasn't this sort of stuff. This is much more labor intensive and sensitive to any inconsistencies that you might have. All right, so just my thinking here, if we make another higher high, so if we go higher, then I will be able to move my stop below this new low, right? But until we have a new reference high, this is still a dangerous thing. So I'm going to keep it at the original stop. If we start to dip down here, that will be my manual exit. So everything is still the same. So yeah, I would say that it probably took me about 9 months of being on a demo before I went live. That was the first thing. But I kind of had success from the beginning because he showed me the good trading locations versus bad trading locations. So I immediately learned how to analyze the larger time frames, and he told me about where the normal stops would be and how to ensure that your stops are stronger. We talked about the round numbers versus the random numbers. And, in my first couple of years, I was never sizing up too much. And back then I was trading with just my own cash. And in the first 2 years, I was already very profitable. So it was swing trading, not intraday. But I would say for intraday, it probably took me all in like 7 years. And I didn't even get into intraday until 5 years into my trading. And by then, I already had like a 6-figure account. So it wasn't like, I was like, oh, God, what's happening? I wasn't really struggling as much as some of the traders who are just using YouTube as their primary resource, and they come across very simplistic momentums, usually strategies that don't really give you the full picture. I kept digging. I wanted to know how to read the market sentiment properly intraday before I did anything. And then in the end, I was like, okay, well, I tried to do it by myself in 2012, so literally like 4 or 5 years after I started trading swing. I tried to do the whole learn to trade intraday alone. And I didn't want to waste time anymore. So I went to an apprenticeship in Chicago where I learned about the volume profile. But it was just like the basics. They didn't go that deep into it. It was just, they taught us about the dome and the liquidity and, the orders and stuff. And just literally like the most basic stuff you can imagine. And they were like, off you went, off you go. And usually what they do first, they used to put you doing like some arbitrage trades. And then if you wanted to become like, more of a speculator, then you had to prove yourself on a simulator, like literally what Topstep is doing now for like fraction of a cost, right? So this is why it's so valuable. But to me, swing trading didn't take long at all. But however, we had very different market conditions back in 2007, 2008. When it came to intraday, I would say from the start that I began looking at intraday trading all the way through to the moment that I saw that I am consistently profitable. Emphasis on consistently, because I was profitable from the start, but it was a bit haphazard, right? One day I would be great, another day I would be down, and another day I would have no idea what's going on. So consistent profitability probably took another 2 years on top of that. So let's say 7 years for intraday, but 9 months for swing for me. So yeah. Let's have a look at some other things, and then we're going to finish up the stream. So yeah, I'm still going to, stay in this NQ because it seems to be trying. It's trying. Trying to go higher. Let's see. yeah, I used to be a guitar player and an alto saxophonist. Is there a date when we get UX products? No, they keep moving it. I would not trust anything. I think we need to get that post up to like at least, I don't know, 400 votes, I suppose would be a good thing. Would XRP be on Topstep? Well, until there's a futures XRP, I doubt it. When they do have futures XRP, yeah, I mean, why not? But it's going to be terrible. Do I prefer swing or intraday? I personally prefer intraday. However, I do have an account, a corporate account with my firm, and we only do swings there. So, you know, you're not... We have like whole strategies where we have to agree on things, and that's swing only. However, recently any swings that we put in, they were done in a day. So read what you want in that with that, because you know we have some pretty good levels for that, but swings don't come every day. You know, swings might appear once every 2 months. They might appear once every 2 weeks. Let's see what happens around this high, former high. So if they fail, I'm going to go up to the 5-minute chart just to remember that this was a previous high. And if they cannot find some buyers here, they'll be out. Let's see what a 100-tick chart tells us. I would use Bookmap for this as well. In fact, let's have a quick gander here. Just a quick look-see of what's going on. Looks like some buyers are trying to step in. So this is all aggressive buyers. But they're not exactly pushing the price in the right direction here. All right, so I'm going to finish the stream. I'm going to babysit this NQ trade. Again, I despise NQ with passion, so keep that in mind. And yeah, we'll see whether we can get 22,500 at some point of the day. If not, we're going to have a dip down to 22,200. There is some balance. You know, obviously we have the FOMC looming over our heads. But yeah, that's kind of the point. So you look at the previous high that you broke, and if you're going to do a breakout trade, we really need to hold above that. And if it doesn't, you just bail, and that's it. Yeah, so that's it for today. I'm going to see if I can get Coach Ray to join us again Thursday, tomorrow. And you will also probably see me on Back to the Futures on the same day. Later on during the main broadcast, so it's going to be a slightly busy week, but yeah, it should be good to get everybody to bail. Okay, that's it. So that was a typical return into the range and an invalidation of what I was trying to do here. Next point of interest is not really until we get to those big levels at 22,200. But yeah, this would be a manual exit or early exit of what I was looking for. So either a breakdown of the previous high or a continuation. And if the market can't hold on to the previous high and go above it, it's an invalidation. So one thing you can do now is maybe try and see whether they hold inside the previous range, which again would need to be probably this 15-minute bearish engulfing to stay below 22,359. This is all like market generated information, and you aim to do like very small losses whilst fishing for like some bigger opportunities in the meantime. But I'm not going to be shorting NQ. I can tell you that now. Even though there is a balance and stuff, we have FOMC, we have stuff. So I'm guessing we're still going to have a very difficult day where it just ambles around and, you know, makes everybody as miserable as possible. Then it kind of goes back up and then goes back down. And so basically a typical wiki range-bound day until we get the data we want. But, you know, for now, we do have a 5-minute bearish engulfing. And it's basically a potential to rotate back through wherever we came from down to this overnight VWAP. I'm not going to be shorting NQ though, so no matter how decent it looks. All right, guys, I'm going to finish it up here. My dislike for NQ continues, especially for this time of the day. But I am now paying for NQ data as well. So maybe if there's, you know, some very good opportunities, I might be popping a few trades in there. Given that we still don't have DAX, and I need to find something that moves a little bit better for this time of the day. So the exploration of what we can use for London continues. All right, guys, thank you for joining me today. Pleasure to have you all here. Again, great questions as usual. That stop loss question was a loaded one, so I spent a lot of time on it. And yeah, let's keep going. Let's keep learning. Let's see what the FOMC brings. Try not to trade into FOMC because that's generally not a good idea. And the core definition of gambling. But you know, once it's out of the way, once he starts talking, press conference, all of that, that's when the real party is going to be. So it's pretty late in the day. So it's going to catch power hour when I prefer to trade NQ and ES. So we'll see what the day brings. Thank you for joining me. I'm Deeyana Angelo, aka Market Stalker D, and this has been the London session on TopstepTV. I will see you tomorrow. Take care.